Hello everyone, this is Steve Olson with Crossroads Multifamily. Thanks for taking a look at this video really quick. We have been long overdue on doing a Proforma refresh. We've been marketing and talking to investors for a long time about this project as we've moved our way through the entitlement phase. And it dawned on me after a visit to the site last week that we could have some stale numbers here. So I wanted to dig into things a little bit and see where we would be at with rents as well as HOA dues. You know, these are two key factors that really swing that net operating income dramatically. So what I have here is the Proforma side by side. On the left side, we have the tax abatement version. And as we've discussed before, investors, depending on what phase they're in, are going to take title and have a rentable property sometime between the second and third year of the tax abatement. And so the taxes on the Proforma reflect that. And that begs the question, well, great, it looks like a good cap rate, an attractive investment, but what happens when the taxes are at full value? Am I going to be sad that I invested in this property? So I have another Proforma on the right called year 6. That is the first full year of full property taxes. So we're going to do a little bit of a side-by-side comparison, and I'm going to do that by going down to the third page of each Proforma. So let's give you the highlights here. You know, we have all of our purchase details with our closing costs and everything. We have all of our debt details. A key figure here is the interest rate. We think that over the next 9 months that rates are going to edge down a little bit. The spread between the 10-year Treasury and the 30-year fixed rate mortgage is a lot higher than it is historically right now. So we don't need to see a ton of movement in the rates in themselves, just more of the spread as hopefully some of that uncertainty and fear bleeds out of the economy. Whether that ultimately happens, I don't know, but that's not far off from what you'd get right now. You might be 6.5 if you buy it down a few points, 7 if you don't at all. And I'm certainly happy to help run Proformas showing that so you can kind of do some stress tests and things. So we can see our rents up here. We can see our expenses here. One quick thing is we had a placeholder on HOA dues of $200 a door per month. And I did another video on what all is included with that. And I would encourage you to watch that, because if you analyze this like a traditional rental, you're going to end up double counting some of the expenses, because the HOA dues do cover a fair amount of the expenses that you would put in a conventional Proforma. But in short, we talked to our HOA management company, and they're feeling pretty good at $180 a door per townhome. So that's where you get the 720, 180 times 4. So that's your HOA dues. But another big change here is in the rents. We got looking around at some of the comparable properties, and we have changed those rents. Let me go down to the last or the rent roll page. We're about 1406 square footage per townhome. We've got our rents all in at $2,100 a month per door. That is based on our visits to the comparable properties and lack of new construction rental properties that aren't like Class A apartments. Just a note, $2,100 is a stabilized value. It's possible that if your unit gets completed and it's the dead of winter and we've still got some construction going, that you're lower. Maybe they do like a $19.99 special or something like that. And that also includes the tech/amenity fee. We've got a smart home program in this development. And so the manager will charge a little extra to the tenant, as well as for some water and sewer and trash recoup that you'll get. So you might see like an advertised rent of, $1,950, but by the time you add on some of the fees, your total net is going to be around $2,100 a month. And I'll show you the comps that we have to support this shortly, but you can go to apartments.com or Zillow. You can search 3-bedroom townhomes for rent, and you'll see for yourself. So, and I'll show you just a screenshot of that in just a minute. So there's your rents. Let's go back up to the third page so that this is still a side-by-side comparison. So in 6 years, what does this look like? Well, it's not actually in 6 years. It's the 6th year of the abatement. So it's more like in 3 or 4 years. What we did to try to give the best picture we could of what this would look like is on our software, we increased the income and expenses by 3% per year until the 6th year, and we plugged in the full tax at that point. You can see the big difference in taxes there once the full abatement is gone. You can see a good difference in rents as well when you increase those at 3% per year, right? You can see these differences in expenses. They all went up too. I don't think it's fair to increase income and not expenses, right? That's not a great way to look at it. So you can see ultimately we're dealing with an 8 cap and an 8.1 cash on cash. Over here it pivots down to 7.9 and 7.8. It doesn't move a lot. So when those rents and expenses kind of creep up with inflation, which they're known to do in Indiana, it's a much more tame market than some of the markets I've worked on in the Western U.S. You can kind of see how this ends up. You can contact us to get copies of these Proformas, and like I said, we're happy to help you run examples of, well, what if the mortgage rate is this, or what if the rents are like that, so you can calculate what your margin for error is there. I wanted to show you this really quick. This is apartments.com, and this is just me punching in 3-bedroom townhomes for rent in Fort Wayne, Indiana. And our project is right on the Fort Wayne and New Haven border, right through here, as you can see. But you can see some stuff that's pretty interesting. One thing that I checked into was this one, and they've got pretty cheap rents in there, and I got digging in, and there is a serious lack of amenities, and there's not a lot of units. It's just 1 or 2 people renting their units with a management company, and the landscaping is awful. If you check it out on Google Maps, they've got asphalt driveways, but no real yards or anything, and it's in a, I don't want to say it's isolated, but it's just kind of out there. You can see this one, Meadows at Kiefer Creek. They've got big rents, anywhere from $1,900 to $2,500. Some of that depends on if your units are furnished, if it's got washer, dryer, how long your lease is, all those kinds of things. But very similar square footage, and we do have an edge on garages there. So, oh, and by the way, these right here, those are 1-car garage units. So this one down below, I didn't even call, but it says you need to call for rents. And then this one, they're getting $2,200. That's a bigger unit, but they have no amenities whatsoever, and it is a one-off rental. So those are some thoughts that we have, as we release these, and we have, the dog park and access to the community center with the splash pad, the playgrounds, the pickleball, the gym, right? The fact that the water, sewer, and trash are included in the rent. You can, of course, add some fees on for that. But and also a big deal here is the fact that we have full 2-car garage units and 2-car wide driveways, plenty of parking. That's what makes us feel like, okay, in 6 to 9 months from now, $2,100 all in is a pretty reasonable rent level. So we wanted to share that with you because it, of course, has a big impact on the Proforma. Please reach out if you have any questions, and have a great day.